Now we'll quickly move on to another interesting session. Yes, it's going to be on digitization, wealth 2.0, deciphering the code of digital wealth management. And let's welcome our speaker here on stage, Mr. Dhiraj Relli, MD and CEO, HDFC Securities. Let's welcome him here, ladies and gentlemen.
Good evening once again. I'll take about 15-20 minutes to talk about the digital wealth management ecosystem. But before I talk about the digitization in the wealth tech space, let me take you through some of the data points that will help you to get the context right. Yeah, so I'm sure all of you are familiar with the Jandan Adhar Mobility as Trinity that has shaped the digitization in India. It's been big enabler for India to digitize all the transactions. UPI transactions have grown more than 100x and similarly in value terms 130x in last few years. I'm just rushing some of these slides because I feel that this is a informed audience and you are familiar with these data points. So we have in India about 120 crore mobile users out of 1.4 billion population, which is a large coverage, and out of 50% of that is smartphone users. So 66 crore kind of a smartphone users in India, which means they are readily available as target segment for all wealth management, wealth tech firms to engage with them. This is a very huge, large universe. And many more people are replacing their old feature phone with the smartphones, and many people would even buy more and more refurbished smartphones also. So the target universe, the target audience is going to expand disproportionately. Our median age is just about 28.7 years. This is a big opportunity, but this is not an infinite opportunity. This opportunity will be available with us for next 3 decades before India gets old. So the moot point here is that we got to get rich before we get old. That's very, very critical. And that's where I believe the whole digital ecosystem, digitization, and wealth tech will play a critical role, and that would facilitate that many people are using various digital tools to get richer and manage their savings and investments better. So we have low dependency ratio, 35%. You're familiar that with the Jandan movement, 50 crore new users actually got access to the banking system, and out of them, large percentage is of women users also. So in sum and substance of what I'm trying to communicate, India is a very large market for a wealth tech space. And you would ask me what all these data points have contributed to. You can see that how the number of demat accounts have grown manifold, 3x, over 3x in last 5 years' time. And number of folios in the mutual fund are now around 16 crore or so, which is a large number for India. I started distribution space way back in 99 when mutual fund and distribution of these financial product was a new concept. At that time, we had to do a lot of concept selling to the customers on the what exactly is mutual funds are all about. What is open-ended mutual fund? What is closed-ended mutual fund? What are different categories of the mutual fund? From there to now, where you have 16 crore folios, we have actually progressed a lot. Yet, if you look at in terms of the opportunity, if you look at this as a percentage of smartphone users, we are still at 25%. And this number is also, this folio number is also not a unique number. This is also a multiple customer, one customer having multiple folios also. Actually, the unique folios are around 4 crore or so, which clearly means even if I look at the target segment of only smartphone users, we are not even at the high single digit in terms of penetration also. And the beauty here is that some of the products like mutual funds, one can start investing in these products at as low as 100 to 500 rupees also, which means that the penetration is absolutely viable can be done through the simpler tools, simpler technologies, and particularly low-cost execution ecosystem. And similarly, if we look at some more data points, how the MF assets have grown, they are at 51 lakh crore. Today, AUM is 51 lakh crore, slated to go to 100 lakh crore by 2030. And we've seen the penetration coming in from all over. It's not that it is only confined to Maharashtra or Gujarat. Now we see from a tier 3, tier 4 cities, it's widely spread. And in fact, in last many years, incremental demat accounts and incremental folios are more coming from the B15 cities beyond top 15 cities. So which means that there is assimilation of technology as well as awareness of the financial product, and there is a need, there is a requirement at the customers level also to participate in the India growth story through the different instruments. In fact, I strongly believe in next 2 decades, the whole wealth management ecosystem would be led by the equity and equity related asset classes and not anymore by physical assets or even by the financial assets like fixed deposits. If you go back and look at the last 70, 75 years of history in India, you would easily able to conclude that it was predominantly dominated by the physical assets, whether it's real estate, gold, silver, and so on. And then even if when the financialization of savings started also, it was primarily driven by the fixed deposits or a fixed income instruments. In fact, it is not even the fixed income instruments also. If you look at like today, one can buy a G6 at 7% plus yield, but hardly any investors who are looking forward to buy because there are no ecosystem or a very limited access and very limited understanding for the instrument like Government of India Securities is available in India, whereas they might be offering you a yield better than some of the bank fixed deposits also. And particularly, there are hardly any banks who probably give you a 10-year fixed deposit program also. So from that point of view, even in the fixed income space, we have a long way to go. And I strongly believe that the digital ecosystem can only be a route to have the better penetration. I am sure you all are tracking the SIP inflows, 17,000 kind of throughput value. And trust me, the average ticket size is just about 2,200 rupees or so. And this number will grow manyfold. Even at the lowest income earners, it is not even 10% of what their salary credit is. Okay, today, even if it goes to a 10% of salary credit for most of the people, this 17,000 number can grow to a manyfold, at least 3-4x in next 5 to 7 years time, which would mean that we will have a robust inflows coming in, steady inflows coming in India, and we will be able to counter the volatility arising out of the institutional participation or non-participation, both. Yeah, this is about the PMS and AIFs. Again, close to 4 lakh crore each kind of an AUM in the PMS and AIF. So it is not just about the vanilla instruments like, direct equity investments, IPOs or mutual fund that has taken acceptance from the Indian investors. It is the complicated instruments like PMS, AIF, within AIF category 1, 2, 3. Investors are participating in all possible products to ride the listed and unlisted space. AIF is largely used to participate in the unlisted space also. We also have a quite robust unlisted securities market also. That's another opportunity which one can work on by getting it some digital ecosystem which can work on the counterparty risk and can enable a very safe, secure transactions possible, viable, without any, without any disconnects. So a lot of transparency can be brought in through the digital ecosystem, even in the unlisted transactions also. We have seen some kind of a transparency coming in real estate transactions, though it's not yet fully there, but we still have some platforms that gives you a visibility of a pricing. Like in real estate, there is a buyer, there is a seller. In unlisted space also, there is a buyer, there is a seller. So you carry a counterparty risk. In a listed space, this risk is not there because exchange is guaranteeing your transaction. When you are investing into mutual funds, you're dealing with an institution, so you pay money, you get the units allotted to you through the ecosystem. But in some of the unlisted space, this counterparty risk is still very high, and if one can work on the same, this can be a very big opportunity for increasing the participation of some of the unlisted companies also. Of course, it has to get the regulators' blessing. Today, unlisted securities are not regulated, so that's where they are not listed on the stock exchange and have no blessings of the regulators. But it's only a matter of time that some more platforms like that will evolve, which will facilitate these kind of transactions seamlessly with utmost transparency also. So we have seen the emergence of robo-advisory. Basic financial planning today also is in place. If you go and search, you will find few basic financial planning tools available, but we are yet to get into the space where you have an advanced financial planning available. In India, financial planning is at a very nascent stages. Today also, if you go and do a dipstick at the investors level, you will understand that they are dealing with multiple banks. They are dealing with agents, they are dealing with the insurance agents, and so on. So they have multiple wealth partners, platforms to help them. For broking, they'll deal with a platform. For their mutual fund investment, probably they'll deal with the investment advisor. And for insurance, they would deal with another agent, and so on. So today it is quite fragmented. And as basic as asset allocation is not being done judiciously and being tracked also. So some piece of it is available, but a lot of it is to be disrupted, and I believe the technology can play a very important role, and there is a dire need for progressive financial planning. For financial planning, you need a lot of data, a lot of information from the customers or investors, but it is not possible to get this data from different sources till now. But now with the account aggregator coming into the play and a lot of social profiling, and through some of the agencies, you can get the data. Some data can be obtained from the customers also. As and when customers, investors get more and more comfortable, they'll share more data. The more data they share, the more viable financial plan can be prepared for them, and one can help them on this space. So this is one space which is up for a big disruption in next 2 decades, next decade or so. Robo-advisory, in some form or shape, it is available. I heard Chetra talking about they are solving something on the simple solutions on which 3 best mutual funds are best for them to invest and so on. I think there'll be a lot of fintech players who will be working on this piece. Here I'll take a pause and try and help you to understand the whole dynamics of the investments. So first, investors need to do discovery. Which instrument, what asset classes. Then second thing they need to do is to decide. The third thing they need to do is to execute. Fourth thing they need to do is to track or monitor their investments. The fifth thing they need to do is to optimize their portfolio. So this is a whole cycle of evolution in the investments. Today, as an industry, as a BFSI industry, there are different players who are solving different problems. Some are operating only on the execution side of it and have done ease of execution. Some are working on the decision side where they are giving stacks, they are giving baskets, or they are giving curated solutions, model portfolios, and so on. And some have portfolios, they are just platforms who gives you a platform to track your portfolio. You have to manually or input most of the information and then track, and some platforms also do offer you to optimize some of these portfolios through the quant help of some of the quant tools and so on. But there are hardly any players who are giving you a holistic experience where right from the discovery, which means learning about various products, various financial instruments, various asset classes, to taking a decision, to executing the same, tracking that as a portfolio, and continuously optimizing that as a portfolio. So all these spaces individually in their silos as well as in a holistic way are the scope of work for the wealth tech, and all these places will see emergence of many players who would leverage the technology and digital ecosystem and ride on the same to create a viable, simpler, transparent, low-cost solution for the investors. Why technology and digitization is even more critical? I think the people are working in India are also in different time zones. They also have a different requirements. They want to access their wealth, their portfolio on weekend and work on the same. They may want to spend some time only in the evening hours, early morning hours, and so on. So it's only viable to do it through the technology and digital ecosystem. Today, stock market is available from 9:15 to 3:30, and you would have heard, probably you would have tracked in the news that the Association of Brokers have said that they are okay with the extended hours, and National Stock Exchange and their CEO is aggressively looking at extended hours of trading. It's only a matter of time that we will get the extended hours. All over the world, markets operate almost 23 hours. So we will not be far away from operating for a longer hours. May not be 23 hours to start with. Maybe only part of the market, only index futures and so on. But longer hours are available, which clearly means that it can only be supported by the digital ecosystem and not by the brick and mortar ecosystem also. So way forward, I strongly believe that the AI will take over. A lot of information would be, many wealth tech companies will use artificial intelligence to come out with the great solution. I myself is not a tech expert, but I can tell you throughout the day, I think 30 to 40% of our energy in HDFC Securities is going on discussing how do we leverage the machine learning and artificial intelligence. Some of it in the form of robotic process automation we have done as an implementation in our operations, which means, clearly everything is tracked through the directly digital process and without any human intervention. Today, if somebody is submitting their ID proofs, they automatically get scanned, match, and even 3 a.m. the form is getting approved, and you can go ahead and start transacting in that piece. So these are some of the use cases which we have already implemented, but I strongly believe that there are hundreds of different use cases that are viable with the machine learning and artificial intelligence across all areas that I have mentioned in past. And I strongly believe that there will be a differentiated product coming in for a different category of investors, including the high net worth investors. So there will not be one size fits solution for all investors. There will be multiple solution. It's like, some are templated solution and some are tailor-made solutions also. And you will have a market, you will have an opportunity for all these solutions. So that's what my few inputs on the wealth tech space. If there are any questions, quickly I can take that. Thank you. I guess I don't have much time for the questions.
Do we have? We can take one or two,
Yep.
if any.
Yeah, please.
India is mainly not a DIY market, right? So people want handhold.
Yeah.
When there are fluctuations and volatility in the market, in that case, only the digital platform is going to help.
Yeah, in last few years, we have seen more and more disruption on the execution-only platforms. Now, I think on pricing and execution-only platform, the disruption has already been done. The next level of disruption will come on the decision parameter and discovery parameter. And decision parameter is very critical. If you look at just within the Tata group of companies, in a calendar year performance, they'll be minus 50% plus kind of a returns in the same group itself. So obviously there is a dire need to work on the decision space, and there are many companies like HDFC Securities who are working on various methods to leverage the all possible variables, information, data points that are available to come forward with the digital solutions to give them how to take a calibrated decisions. Honestly, I can tell you, even after 25 years being in existence for the mutual funds, if I go to a social forum, the first question I get is which mutual fund scheme I should invest in. We haven't yet crossed that hurdle also. Yeah. Okay. Thank you. Thank you so much. Thank you.
Thank you so much, sir, for this interesting section. Thank you.